Speaking of ships, let's go to the cruise line business. Carnival Cruise Line reported numbers that I thought were in line with a little bit better, took their guidance up, but stock's down 2.8%. So I don't know what's going on there. But Brian Egger does. He covers the cruise industry and lodging business for Bloomberg Intelligence. He joins us here in our studio. Brian, break down Carnival Cruise Lines. How did their quarter go? What's their guidance kind of tell you here?
Yeah, so overall, strong quarter and more of what we've been seeing in the past, which is strong onboard spending. Close-in bookings look really good. And overall, the demand pace from the consumer's perspective is quite strong. I can't really attribute anything to the specifically to the stock price decline. I do know there was some discussion on the call about the effect of expense timing, higher dry dock costs, expense timing going into the fourth quarter, but that's generally in line with what was previously expected and not at all indicative of any kind of systemic cost issues. So overall, I mean, from a demand perspective, compared to the other sectors we follow, cruise lines have not shown any crack.
Yep. Where are they in terms of deploying their fleet? Are they fully deployed now? Do they keep ships in port? I don't know what they do here. How does that work?
Yeah, they're fully deployed. They're back to full pre-pandemic levels of deployment and occupancy. In fact, one of the pieces of good news going, I think, into next year's cost growth, or I should say capacity growth, is quite modest. So that kind of is another favorable factor in terms of yield demand for next year.
What do we think the relationship is between, say, U.S. GDP and Carnival? Like, how recession-proof or not recession-proof or sensitive are they?
Yeah, I've generally viewed cruises in general as being modestly cyclical. But if you go back historically over decades, passenger growth has kept pace with supply growth even across weaker economic periods. So although this is broadly a consumer cyclical, it has generally proven to be less cyclical than other sectors because of the significant penetration expansion opportunity, getting more first-time cruisers.
We've heard from Carnival and from the other cruise lines that demand, as you mentioned, remains very strong. Why aren't they just launching new ships, cranking out new ships to meet the demand and try to take advantage of this?
They're doing that, and over time, you're going to see kind of this mid-single-digit capacity growth measure. It just happens to be a point in 2025 where the level of capacity growth is like 0.7%. So it's a more modest period of growth here, which I think probably entering some period of economic uncertainty, not itself a bad thing. They're also adding more amenities other than new ships, like their private island destinations and things of that sort.
Excuse me?
Very
what? Wait, so I take a cruise to a private island? Whose island?
Yeah, so Celebration Key is one of those private island destination islands that most of the cruise companies have, and that's something that they're going to be unveiling going into next year. So I think that, combined with generally strong pace of demand and the fact that on the ships themselves, the onboard spending really has not let up, those are all very favorable factors. And we're obviously watching this closely given all the understandable concerns about what happens with the consumer if there's any kind of economic slowdown.
What's the biggest cost drivers that these companies have to manage here?
Yeah, I mean, generally fuel has always been something we watch carefully, but fuel, food supplies, it's kind of a different kind of labor composition than other industries. But certainly if you look at the cost growth picture, things that are always, we carefully watch are things like foreign currency exchange movements and fuel cost growth.
How about this whole clean thing? Do they care about that stuff?
Oh yeah, no.
Talk to us about that. 'Cause I know they were talking about trying to reduce their carbon footprint, but I see these things steaming down the Jersey Shore. I'm like, I don't know.
Yeah, but also, are you not going to go on a cruise because of that? No, you're going to fly on a plane.
Yeah, exactly.
Anyway, sorry, go ahead.
Yeah, that's okay. So whether it's liquefied natural gas or other types of fuel, they're trying to basically have a cleaner type of industry overall. Obviously, it taps energy resources, but that has been a big focus throughout the industry, is trying to minimize their carbon footprint.
All right, Brian, thanks a lot. Really appreciate it. Brian Egger, Bloomberg Intelligence, Senior Gaming and Lodging Analyst. Very much appreciate it.